Good morning, guys. Welcome to this Friday, February 7th, Employment Friday. So, market is in a holding pattern. Nothing, no selling, no necessary, no real buying either. Just kind of holding, waiting for the employment situation. We had Amazon earning come out yesterday. It's a little bit to the downside, not a whole lot, but a little bit to the downside. And other than that, most of the stocks that seems to be uh, pretty much flat for the overnight. So today we get the employment situation at 8:30. We have a speaker, Fed speaker after that, consumer sentiment, and wholesale inventories at 10. So 8:30 and 10 we have news this morning. Another speaker at noon, by the way. All right, so a couple of Fed speakers as well. But employment situation is going to be the one to watch. Let's see what kind of reaction we get from that, and if the market is going to be able to sustain, hold on to the little gain we had. So it's been a real struggle holding above these support areas. First one has been the 60-40. The next one has been this 6100s, and you can see that last distribution here. Now we have a fair amount of volume right at that edge, at the 35 to 40s, and we are right up here bouncing up against this ledge at the 6100s. So they can take that out. May have a shot at getting out to the 6150s, maybe even start an extension to the upside. But so far, in the bigger picture, I mean, the market has been holding back and forth here towards the high end of the market for quite a while now. We had a few scares on the DeepSeek and on the what was the DeepSeek, and then what's the tariff situation. At this point, I'm not seeing anything like that, but in this administration, anything can happen. So every day is a new day, and every day something happens and something gets announced or so on and so forth. So just be aware. You never know when something new comes up to the surface. However, to get started this morning, and the caveat for today is really what happens on the employment situation. Are we going to get a big directional move? If so, they're going to try to trade it in that direction and see if they can continue, see if we get continuation. If we do not get a big directional move, but just volatility, and then it goes back and forth, then we're going to pretty much fall back on the analysis, right, which we are, this analysis we're doing right now. So, big directional move, bars 5-10 times bigger than the average. You'll know it when you see it. It's not going to be as a little pump. It's going to be like a big directional move, and then you're looking for a balanced bar to form, and then you're looking for potential continuation from that spot. So that's kind of the newsday trade. If it doesn't happen, I'm not sure. I'm not necessarily thinking that that's going to happen. I think that we're going to get more of a volatile but not directional reaction. I'm thinking falling back on the analysis, looking to buy a weakness at this point at the 95s, the 85s, 75s, 65s, down to the 55s for rotations back up. They start heading below the 55s. I mean, at that point, we are heading back to reverse retest this support area. Those are the last ones, 55s and the 45s. Going to be the last areas to try to buy against. And on the way up, I don't have a whole lot above the 6100, 6110. We had an edge a little bit higher, but you can see this low volume area in front of us. They clear that area. They have the 6130s, 45s, and then the 60s up here to lean against. I think the obvious one is the 6130s. That's your small attractor above this. And that one is where they're likely to go if they start moving higher. And then it's just a matter of see if they can take out the highs. Now, we are up against resistance. So we're looking for potential short setups against these upper levels. I would be as a little bit caution. If they take out the 6100, I would trade that with a little bit of caution since it's pretty light. I mean, usually if you have a little bit more volume to lean against, you can be a little bit more aggressive on those. But you have an attractor here at the 6130. You have one at 6150. Sorry, the resistance area and edge at 6150. And I'm not sure that is super strong by any means. But I think the best one is going to be at the 30s if this starts trading higher. And that's about it. But initially, looking for short against the 6110, 5 to 10 here, that's an area they've been stalling at for quite a bit. We are trading right at it, so I have a sense that news is going to move us away from that area, but that is an edge as well. So potential shorts against that 61.10, 30, 50 for rotations back down. And you can say there could be an edge in between here as well. It's hard to say. I have nothing which really sticks out. I mean, you have that three-letter edge here at the 61.17. You have a potential for a small one here at the 61.24. But it's just not strong enough for me to want to draw an edge on it. So initially, I would prefer to buy weakness. And if it starts trading below the low of yesterday, the 60.70, I think I would like to take off the long bias. Still looking to buy against the 55s and the 45s after that for rotations back up again. So that's kind of the dynamic I'm looking for this morning. But the employment situation, it could pop the market up or down. We have to wait and see, let the reaction fall out. And then let's see, then we'll find out if the market is trying to take this higher or lower. But on the way down, that's where we have some real data to work with. The 60-65 area here, this is support area, low of yesterday. That comes out, I'll take off the long bias. Still looking to buy against the 65s, the 55s, and the 40s, 45s here for rotations back up, but just a little bit less aggressively. But at that point, I'm back on a range bound kind of a trading style instead. So that's how we get started on the ES. And then let's see if we get what kind of reaction we get on that employment situation. Looking at the bond market, pretty much flat. They're trading around that high volume area, so not much to say about this guy. I would just fade the edges, look to sell 9s and the 14s for rotations back down. Look to buy the 116s and the 115-24s for rotations back up. So pretty tight range, and if they trade above it, I would lean in on the long side. Below it, I would look for that retracement trade I talked about yesterday. So that basically retracing it back to reverse retesting 115s. So fairly tight range on the bonds. Let's see how that reaction kind of pans out after the news. All right. NASDAQ is pretty much up against that upper area. They have been squeezing a little bit above that edge, the 21,800s. They are working that low volume area right now. They're right at or above it. You see they've been traded up a little bit in the overnight. Three-letter edge at the 840s. They're trading right at that one right now. So I would say that almost taking it out, but the overnight trading has been not necessarily the direction, has been just going back and forth, but you can see they're trying to. So if the employment situation comes in with a positive number, I think the NASDAQ pops and it drags the whole freaking market with it. So that's what I think may happen. But we are up against resistance. So if the market is going to be volatile but not directional, I think the chances are resistance could hold. And at that point, bets are off. I think we are running it back down to the 21.5 at that point. So as I said yesterday, this could set up a nice short trade for a big rotation down. It's just not by any means a straight shot. And but you saw yesterday, I mean, this little algo thing, when it kicked in the afternoon, they ran it. They retraced the whole range and then some, right in literally 10-15 minutes. And that's what happens when these algos kick in. And then it creates a buying opportunity at that point. But that kind of dynamic is when you're trading at an edge, can certainly happen. So looking to buy weakness again, 830s, the 800s, 750s for rotations back down. The last one to buy again is going to be 700s. Below that one, I'll take off the long bias and go back range bound. So if the NASDAQ pulls back more than that, I'm thinking that this edge held, the 800 edge, this area held up, and we are basically heading back down again. But at this point, still going to stay on the long side of this and see if we can bust through this area of resistance. So looking to buy against the 830s, the 800s, 750s down to the 700s for rotations back up. And on the way up, looking for shorts against the 890s, 930s, 960s for rotations back down. We are in an area where they're probably going to trade out all the way up to the 22,050. So in this upper area is where you really find, I think, the better shorts. Doesn't mean that they can't stall on the way up here. But I think that's when you head up in this area, the 22,060s, that's when you're going to find the better short setup. So I would hold out for that. If it starts trading higher, stay on the long side until we get up there before I start really considering a big short trade or a more aggressively a short trade. So that's the you have the intermediate. I mean, they have this area from a couple of days back, the 960s and the 940s. They could hold, you know, they certainly could. So just have to be mindful. If you're on the long side of this and the market is moving higher, just be mindful that you don't buy into resistance. That's usually the biggest mistake. I keep harping on that one, but if you stare at an F4 screen like this, you miss that perspective. And you're just sitting here staring at the F4, it's going back and forth, it's getting exciting, and you get on a trade and you realize, why did it just stop? And it's realized like, yeah, well, I just bought into resistance. I should have paid attention to my F2 chart. So that's why I always keep them side by side, because that gives me perspective, and so I don't get too crazy on the F4 exchange member chart or the F4 execution chart, but pay attention to that exchange member chart, which is our F2. All right, finally, oil and gold. So ES and NASDAQ both from the long side, pending the fallout from the employment situation. We'll find out how we're really going to trade it. But at this point, for both of them, if it's volatile but not directional, we fall back on this analysis. And on gold and oil, gold is back up again. They're holding this area. This is 70-71, held up pretty good. One pro below it, they're right back above it, and so far haven't really been able to extend. And as I said before, it's a little bit confusing when gold traded higher like it did. Nothing really justified this gap. Fine, rollover gap, that's fine. It'll move to the upside, that's fine too. But they kept it going and running at $100 higher, and almost another $50 above that. So we're up against that 2,900, and that's a $150 move higher. That's a pretty good move for just the rollover. So I don't think that's the case. There's something else going on there. So someone is hedging their bets on gold. But we'll see if they can hold on to these levels. Watching that support area at 70-71. If they trade below it, look for a move down here to the 2850s, maybe lower. So at this point, looking to buy weakness on gold. At this point, 85 is over. So we got 81, we got 76, we got 71 for buy to try to get long against for rotations back out. And if they take out the 71s, take off the long bias, go back range bound. Watch them trade around the 2850s at that point, or look for retracement back to that level. So that could be a nice short in there for pulling this back to the 2850s, but that's where I think they're going to stall and go sideways. So that's kind of the dynamic I'm seeing on gold at this point. But they're still to the upside, so I would still trade it from the long side. It is sloppy. I mean, it's light and it's sloppy, and it just really you can get you caught. So it's you just had to trade that with a bit of caution. And on oil, we're slowly grinding to the downside with little pops here and there. So I would still stay on the short side of this, looking to sell strength up to that 71-75s. If the trade above that, take off the short bias and go back range bound. But at this point, looking for shorts against 71.30s and the 71.75s. And we are heading back down to this attractor at 69.70. We're pretty much there now, by the way. It happens like before you know it, you're there, right? So you look at this guy, they're right back into this attractor area right now. So we were, remember, they popped this little pop. It had to do with this stuff they put on in the last days of the Biden administration. And since then, it's slowly been grinding back down again. The geopolitical stuff with tariffs and so on and so forth is obviously creating little pops of buying in between. So I'm just waiting for them to take out this bigger area and start trading below the 67, 68. That's when I think things start opening up. And that's not going to happen until we get a little bit further. We see a little bit more policy kick in. Right now, but the policies are being put in place to drive oil lower. So structurally, that's the side we should be trading it on. All right, and looking to buy oil against the 70-90, 70-60, and the 70-30s with a bit of caution, since we are pointed lower on it. So I would just be a little bit less aggressive buying it. And the times on during the day session where it looks like it's worth buying it is you have a little move to the downside that you met with a pretty good retracement. That's usually the better spot to buy it against. But as I said, I'm thinking short side of the market on oil, given what the bigger outlook is. All right, so that's oil and gold. Back to the ES, and we got about 10 minutes left before employment situation. So we'll get some coffee, get ready, and then let's see how this whole thing pans out. Remember, it's Friday. Thank God it's Friday. So don't be too crazy. Alrighty, guys. I'll see you back at 11:30 for the next update. Good trading.